Hello and welcome to the Windigo Trading Post. I'm your host, the Windigo Trader, and this is an introductory video demonstrating the basics of the Windigo Trading System. This is not financial advice. I am not a financial advisor. Do your research elsewhere or contact a licensed professional for any real financial advice. I'm wrong a lot, as you will see in this and subsequent videos, but I have used this system to consistently make money in the markets by keeping my trading psychology in check and using proper risk management. This is my system. I built it and honed it for many years to work for me. You are welcome to take any part of this system that resonates with you for free, but please do your research, rigorously backtest, rigorously paper trade, and adapt to your own needs and to your own approach to the markets. Using this or any other trading system that you do not test, paper trade, and adapt for your own purposes is, I can assure you, the first big step on the long road to homelessness. My system works for me because it keeps my two biggest trading weaknesses in check. Number one, overthinking a trade, and number two, getting emotionally invested in a position. You'll get to know me and my story in subsequent videos where we will drill down into specific FX pairs, commodities, indices, and stocks, but by way of a quick intro, I just wanted to tell you that I've been trading and investing for a bit over 20 years now. My professional career has been made in the financial services, starting as an equity analyst, then as a trader and underwriter, and finally carving out a cool niche in the structured finance space. I've worked all over the world, but have largely been focused on Europe and sub-Saharan Africa. I've collected a lot of funny stories and nuggets of wisdom from those times. I look forward to sharing them with you in later videos where we will get into specific cases, macro outlooks, and other trading strategies. But for right now, let's jump into the system. All right, so let's just go ahead and jump into some results here, show you what the system is capable of. I just picked three things here, more or less at random. Just wanted them to at least be well known. And I'm showing you my P&L trading S&P 500 on the hourly, Euro USD on the hourly, the Russell 2000 on the hourly. So yeah, it's in first quarter 2021. That was a random pick, and then I just picked three things that people are more or less familiar with. So if we would have started our trading account on the 1st of January at basically let's call it 100. Now we can see each of these little bars being one trade, and you can see how the account shrinks and grows with each trade. So in the early part of the year, we started off in losses, mostly in January here. I had a bit of a win in February, and this is looking okay. And now we had about a 15% drawdown into Feb, beginning of March, and then things got moving in a positive direction. So I'm trading CFDs here. I think that's important to mention, but the results are similar with ETFs as well. So when we get into subsequent videos where we go into detail on each security, we'll discuss that in more detail. But generally speaking, we had a pretty successful quarter. I would say above average successful quarter. We had an 80% return on those three CFDs that we were trading. It's not terribly normal, but if you trade this stuff consistently, and consistency is pretty key, it's not unreasonable that you can 1.5 to 2x an account using this system. Yeah, so just kind of keeping an eye on this in the interest of full disclosure. This is an actual P&L. There are lots of trading mistakes in here. Everybody makes them. Everybody fat fingers keys. Everybody screws something up from time to time. It also reflects the inconsistency of trading. Not everybody can get up and stare at a screen for 12 hours a day every day. It just doesn't work that way. We all have lives. Most of us hopefully have some families that require our attention. Trades are missed. Trades are closed out simply because I don't have the time to babysit them if I have other plans for the evening or something like that. So this is sort of actual real world, looking at about a 52% win rate, pretty solid returns for the quarter. Now, what I did also take the liberty of doing is doing some automated back tests. So I wrote an Excel script to have a look at. I took just 20,000 data points, right, on an hourly chart, going back to January of 2017, going through to May of 2021. And this is looking at the S&P 500 on the hourly. This is also assuming that you compound every trade, right? So let's say, as we'll get to later when we talk about risk management, let's say you're trading a €1,000 account with 2% maximum risk tolerance. So each time you trade, you stand the probability of losing €20, at least on the first trade. Well, let's assume that then gets traded up over time to 2,000. You're still using 2%. That ends up being 40, right? 40 on the downside. But what that means is also your upside, which we target, as we'll get to later, at 1.5 times whatever you're set to lose in the stop loss, you compound rather aggressively. And so looking back at this between January 2017 and May of 2021, trading the S&P 500 on a 1-hour basis, you would have had about 95% annual returns and a 49% win rate. And again, this is being traded perfectly, in quotation marks, by essentially a machine. No one is perfect, so this is probably a bit optimistic, if not a lot optimistic. But compare that to our first quarter of 2021, and somewhere in between is the truth, right? So I did that on a couple of different things just to show you what I'm talking about here. I just randomly took it on the euro British pound on the 1 hour, again compounded between January of 18 and May of 2021. We did quite well there on the Excel spreadsheet with about a 52% win rate. Same for natural gas on the hourly between 2017 and 2021, 51% win rate with some really crazy returns. That's mostly due to the volatility there, which when we do our individual deep dive video on trading natural gas here in a couple weeks, we'll see how this is a pretty cool thing to trade using this system. Also get into some of the fundamentals of trading natural gas. But anyway, just illustrating here, 51% win rate, pretty happy with that. Not everybody has time to sit in front of a computer and trade hourly charts. So, the big question is, does this work on the daily? Yes, it does. This is looking at trading the NASDAQ 1 day at a time on a daily chart. Again, compounding from July of 2003 to May of 2021. And there you get about 10% annual returns, right? And that's simply because you're trading a lot less. You have a lot fewer opportunities for compounding. But the cool news with trading daily charts is that if you could devote maybe, let's say, an hour a day to it at more or less the exact time of day, you could probably get away with trading 20, 30 different securities and be able to manage that within about an hour a day. So then imagine the 10% being multiplied each year across 10, 20, 30 different things. So that's one of the benefits of the daily chart. I prefer the hourly just because I actually enjoy trading, but I understand that's not everyone's cup of tea. So let's come back to nat gas real quick. Again, looking at that on a daily chart, looking at about 6% annual returns from 2003 to 21. So it is applicable to the system is applicable to different time frames. And I just picked these things here at random. It's also applicable to trading stocks, trading ETFs. But again, we'll get into that later on. So one might ask, how is this even possible? I'm putting up win rates between 49 and 53%. That's barely better than flipping a coin. So how is it possible that we consistently make money? And how is it possible that we can even double occasionally our capital within a trading year? And the answer is very simple. It's money management, or risk management, if you prefer to use that. Hopefully you're not managing money, not managing risk like the wizard on the far right of your screen. And if you all remember Mr. Austin Powers, very very funny movie from, I think it was in the 90s. If you're not using money management, you're definitely living dangerously, just like Agent Powers. So what do I mean by money management? What do I mean by risk management? I think the key, the absolute key, is no matter what, never ever risk more than 2% of your account on a single trade. You can certainly risk less, but you shouldn't risk more. There's an old saying that there are old traders and there are bold traders, but there are no old, bold traders. And as somebody who blew up several accounts early on in my trading experience, I can tell you it's quite painful, and I can tell you in my personal experience, it came from doing a lot of dumb stuff, but among them risking more than 2% on a trade, revenge trading, etc., etc. There's some hard lessons learned within my first year. Fortunately, the accounts were small, and I could afford to lose it, but never ever risk more than that 2%. And Mr. Ron Burgundy agrees. He says risk management is kind of a big deal. And while I was searching for that meme, I found this super cool thing with a raptor riding a great white, which I thought was pretty interesting. So yeah, risk management. Just do it. Don't end up like these guys. Don't end up a degenerate gambler. Don't end up like that South Park character. Can't remember who it was, if it was Kyle or if it was Cartman, who takes his birthday money to the stockbroker and loses it twice over. That's revenge trading. That's bad. Don't go all in. This is not Texas Hold'em. Great. So let's talk about the Windigo trading system as such. So what is it? It uses technical indicators, in particular the Ichimoku cloud and the Twigs money flow indicator, and technical analysis in order to provide guidance for proper money management. It shows where to set stops, where to take profits, how to size positions, and, if done correctly and consistently, how to generate lots and lots of compound interest. And as we all know, Albert Einstein once called compound interest the eighth wonder of the world. So the method, which we'll get into in a lot more detail, and then we'll show you a couple live trades and so forth in the back half of this video, but just real quick, the method split up into primary signals, confirmation signals, stop loss, and position size. Our primary signal is provided by the Ichimoku cloud. Our confirmation signal is provided by the Twigs money flow indicator. Our stop loss is also shown, sort of where to put that, by the Ichimoku cloud now. Previously, I traded this system using the ATR indicator, so just looking back at the range of prices over the last 14 trading periods, be it days or hours, whatever I was trading. And I used that for a while, and it generated similar results, similar win rates, but the trades are a lot shorter. The stop losses tend to be much more narrow, doesn't give the trades a lot of room to breathe. And for me, I just ended up, in my opinion, over trading, and is psychologically exhausting for me. So I moved it to using the Ichimoku cloud. It gives the trades some room to play out, and it's just a lot less of a nail biter. We'll put it that way. And then looking at position sizing, we do that with technical analysis. So, for example, if you're trading, if you're taking a long position and you are looking at taking that long position headlong into a major line of resistance, maybe you don't take that trade, or maybe you put on a smaller position until such time as the price breaks through and you can justify putting on a full-sized position. This is kind of how I play that one.